Hello everybody, today is Monday, July 31st. It's 4:06 p.m. or 4:05, almost 4:06. The E-mini S&P currently trading at 2468 and a quarter on Monday, July 31st. We had a pretty decent day for the auto trader. Before I begin, first the required disclaimer. Okay, so just a few minutes after the regular session close, you can see the time and sales in real time. Our videos are always recorded the same day as the trades. So the way the trades show here is the way the trades actually happen. This is not a historical trade. The auto trader unfolded on live data with this trade today. So first up is our crude oil and 150 tick chart. This did 900 for the day. There was quite a few trades on this today, uh, fairly active, but it did pretty good. This is trading our line break logic, and you can see the line break signals here, and you can see the indicators giving some great signals, not only by themselves on the bars, but in conjunction with the line break signals. They did pretty good. So here I'm just switching to candlesticks, and you can see where the bars turn blue here and our line break signal. So these are some pretty good signals on the auto trader. A nice long run here, but we got stopped out earlier. Our targets are fairly small with a tight stop here. So obviously this could have went very far, but in any case, 900 for the day on two contracts in the crude is very good. Okay, next up is the Russell on just a regular 5-range chart, and we're starting to see some profitability out of this. This just had two trades here and did 615 on two contracts. We probably would have caught this trade as well, except what we're doing here is a limit order with a pullback of 4 ticks, and there is some benefit to pulling back 4 ticks. As you can see on this trade, we pull back almost to our volatility stop. Here on the short, we actually got filled at the volatility stop. The benefit to that is that if you're wrong, the bar is going to turn blue on the short. If you were wrong, the bar would turn blue 5 ticks later, and the most you would risk is 5 or 6 ticks on a trade. So because it's going to take you out of the trade on the reversal. So by getting filled on a limit order on a pullback, you're that much closer to the reversal point. So if you're wrong, you're not risking that much. Okay, a decent gain on the 30-year bonds on the 377 tick regular line break chart. We had a really nice short trade, and then we gave a little back on this loser here. It looks like we had an equity high of about $500. Okay, next up is the E-mini S&P on a 2500 tick line break chart, and this had 3 winners and 2 losers. Here's the loser here and a loser here, and this did 587.50 for the day. That's excellent performance for the E-mini S&P. Again, if you made $500 a day on average, that's $2,500 a week or $10,000 a month. Next up is the ES on the Precision Renko chart. We had a mixed trade, a winner and a loser here. This is trading 3 contracts. And then a nice winner here. We did 287.50 for the day. Next up is the Dow E-mini contract. And we had a couple of small losers and a couple of nice winners, ending up doing 225 for the day. And then finally we have the crude oil and the Super Renko 10 tick. We had a small loser here and then a decent short trade. There could have been more here. On the long here, we probably did not get filled on our limit order. On our Super Renko 10 tick, we have a pullback of 12 ticks. So we missed this long trade probably by a tick because there, you can see there's just a little tail on this bar here. And so from the close here, it pulled back about 8 ticks or so, probably more like 6 ticks. So we did not come near getting filled, unfortunately, on this long trade. But we still were on the plus side of the ledger. That's all for today's video. If you would like to find out more, please visit our website or contact us at systems@bluewavetrading.com. Thanks for watching today.